Question 1. Which of the following best describes the primary difference between lone occupation and any occupation disability insurance policies? A. Lone occupation policies provide benefits for the insured if they are unable to perform their specific job duties, while any occupation policies require the insured to be unable to perform any job they are reasonably qualified for. B. Lone occupation policies are only available for short-term disability, while any occupation policies are only available for long-term disability. C. Lone occupation policies are typically more affordable than any occupation policies as they offer less comprehensive coverage. D. Any occupation policies provide benefits only if the insured is completely incapacitated and unable to perform any work, while lone occupation policies do not require total incapacitation. Answer. Explanation. Lone occupation disability insurance provides benefits if the insured cannot perform the duties of their own occupation, regardless of whether they can perform another job. In contrast, any occupation policies only provide benefits if the insured cannot perform any job they are reasonably qualified for based on their education, training, and experience. This distinction impacts the scope of coverage and benefits provided by each type of policy. Lone occupation policies are generally more expensive due to the narrower definition of disability as they offer more comprehensive protection. Question 2. Mr. Thompson has been on long-term disability benefits for 6 months due to a back injury. His policy includes a 60-day waiting period after which he receives 70% of his pre-disability income. After 6 months, Mr. Thompson receives a job offer for a position that requires less physical activity and offers a lower salary than his previous job. Under the terms of his policy, what should Mr. Thompson do regarding his long-term disability benefits? A. He should immediately accept the new job offer as it does not affect his long-term disability benefits. B. He should consult with his disability insurance provider to determine if returning to work would affect his ongoing benefits. C. He should reject the job offer as accepting it would terminate his long-term disability benefits under the any occupation clause. D. He should continue to receive benefits without informing the insurance company as returning to work in a lower-paying job does not change his eligibility. Answer. B. Explanation. In this scenario, Mr. Thompson should contact his disability insurance provider before accepting the job offer to confirm the impact on his long-term disability benefits. Disability insurance policies often have provisions for residual disability or partial disability benefits, which could affect his benefit amount if he returns to work in a low-paying, less physically demanding role. Insurance companies assess whether a return to work impacts the disability benefits based on the policy terms, and failure to report changes in employment could lead to overpayment or even claim denial. Therefore, consulting with the provider is essential. Question 3. Which of the following is the most likely reason for a disability insurance claim to be denied under Vermont state regulations? A. The insured does not submit medical documentation to support their disability claim. B. The insured's disability is caused by pre-existing condition which is explicitly excluded under the policy. C. The insured fails to notify their employer within 30 days of the onset of their disability. D. The insured fails to provide evidence of their financial loss during the waiting period. Answer. B. Explanation. A common reason for denial of disability insurance claims in Vermont is when the disability is caused by a pre-existing condition that is specifically excluded under the terms of the policy. Most disability insurance policies have exclusions for pre-existing conditions, and if the disability is related to a condition that the insured had prior to the policy's effective date, the claim may be denied. Additionally, failure to submit medical documentation or notify the employer might delay claims, but the pre-existing condition clause is more definitive reason for denial. It's important to carefully review the terms of the policy to understand exclusions related to pre-existing conditions. Question 4. Which of the following is a key distinction between short-term disability (STD) insurance and long-term disability (LTD) insurance? A. STD insurance typically covers disabilities lasting less than 12 months, while LTD insurance covers disabilities lasting for a longer duration, often until retirement age. B. STD insurance covers all types of disabilities, while LTD insurance only covers physical disabilities. C. STD insurance benefits are usually based on 100% of the insured's income, while LTD insurance provides a low percentage. D. LTD insurance generally has a shorter waiting period compared to STD insurance. Answer. Explanation. Short-term disability (STD) insurance typically provides benefits for disabilities that last for a relatively short period, usually less than 12 months. Long-term disability, the insurance, on the other hand, is designed to cover more extended disabilities that can last for years or even until the insured reaches retirement age. STD insurance usually has a quicker approval process and shorter waiting period, but its benefit period is shorter. Lid insurance offers longer term support but typically involves a longer waiting period and provides a percentage of the insured's income, usually lower than the STD benefits. Question 5. Mr. Roberts, who has been receiving long-term disability benefits, plans to return to his job after a 1-year absence due to illness. The insurance policy includes a recurrent disability cause. Under what scenario would Mr. Roberts most likely qualify for benefits again if his illness recurs? A. If the illness recurs within 12 months of the end of the initial disability period, he can restart his claim under the recurrent disability provision. B. He must wait for a new elimination period to apply and will not qualify for benefits under the recurrent disability cause. C. His claim would be automatically rejected because returning to work means he has no further eligibility for benefits. D. His benefits will be reduced by 50% if the disability recurs even under the recurrent disability provision. Answer. Explanation. Under a recurrent disability cause, if a disability reoccurs within a certain time frame, often within 12 months of returning to work, the insured can generally qualify for benefits again without having to satisfy a new elimination period. This clause is designed to protect individuals who suffer a relapse of the same condition. The insured must notify the insurer and follow the necessary steps to restart the claim. If the illness occurs after the specified period, a new elimination period might apply, and the claim may be treated as a new disability. Question 6. Which of the following is a common exclusion found in disability insurance policies in Vermont? A. Disabilities resulting from self-inflicted injuries. B. Disabilities caused by temporary illnesses that last less than 30 days. C. Disabilities caused by on-the-job accidents which are covered under workers' compensation insurance. D. Disabilities caused by a pre-existing condition only if the insured had not received treatment for the condition in the past 5 years. Answer. Explanation. Most disability insurance policies in Vermont, as well as in many other states, contain an exclusion for disabilities resulting from self-inflicted injuries, including attempted suicides or intentional harm. This exclusion is standard in most disability policies to avoid moral hazard and the potential for abuse. Additionally, while on-the-job accidents are typically covered by workers' compensation, self-inflicted injuries are excluded in most cases, regardless of the policy. Pre-existing condition exclusions are also common, that they do not typically rely on a 5-year period. They are often defined by the insurer's underwriting policies. Question 7. Which of the following would most likely be considered residual disability under Vermont disability insurance law? A. An individual who cannot work at all due to a back injury and is unable to perform any job duties. B. An individual who is able to work part-time but at a reduced income due to a chronic condition. C. An individual who has a disability but is still able to perform the majority of their job duties without any loss of income. D. An individual who is completely unable to work for any duration, but the condition is expected to improve over time. Answer. B. Explanation. Residual disability refers to a situation where the insured is partially disabled and can still work, but at a reduced income level. This concept applies to individuals who are not completely disabled but are unable to perform all of their regular job duties, often due to a chronic condition or injury. The insured may receive a reduced benefit that reflects the difference between their pre-disability income and their post-disability income. Full disabilities where the insured is unable to work at all, or those that involve short-term conditions, would not qualify for residual disability benefits. Question 8. Which of the following statements best describes the process of filing a disability insurance claim in Vermont? A. Claims must be filed with the Vermont Department of Financial Regulation (DFR) before the insured contacts their insurer. B. The insured must submit medical records, diagnostic tests, and any other supporting documents within the specified deadline set by the insurer. C. The insurer is required to accept a claim within 15 days of receiving all the required documents, regardless of the validity of the claim. D. The insured must first accept any vocational rehabilitation offered by the insurer before submitting their claim for disability benefits. Answer. B. Explanation. When filing a disability insurance claim in Vermont, The insured is required to submit medical records, diagnostic tests, and other supporting documents as part of the claims process. The insurer typically provides a deadline for submitting this documentation, and failure to meet the deadline may result in a delay or denial of the claim. While the Vermont Department of Financial Regulation (DFR) can be involved in regulatory oversight and disputes, the claim itself is generally submitted directly to the insurer, and not all claims are automatically accepted within a set number of days without review. Vocational rehabilitation, if offered, is part of the recovery process, but it is not a prerequisite for filing the claim. Question 9. Which of the following best explains the role of the Vermont Department of Financial Regulation (DFR) in the disability insurance claims process? A. The DFR determines the eligibility of disability claims and approves or denies them. B. The DFR regulates the terms and conditions of disability insurance policies but does not get involved in individual claims disputes. C. The DFR is responsible for conducting independent medical examinations (IMEs) for all disability claims. D. The DFR provides legal representation for the insured if their claim is denied by the insurer. Answer. B. Explanation. The Vermont Department of Financial Regulation (DFR) regulates the insurance industry in the state, including the terms and conditions of disability insurance policies. However, the DFR does not typically handle the individual approval or denial of claims. Its role is more focused on ensuring that insurers comply with state regulations and that the policies offered to consumers are fair and transparent. If a claim is denied, or if there is a dispute between the insured and the insurer, the DFR can assist with resolving the dispute, but it does not manage claims directly. Question 10. What impact does receiving Social Security Disability Insurance (SSDI) have on long-term disability benefits in Vermont? A. SCI benefits are considered additional income and are subtracted from the long-term disability benefit amount. B. SDI benefits are used to calculate the maximum benefit that can be paid under a long-term disability policy. C. SSDI benefits are not considered when determining eligibility for long-term disability benefits. D. SCI benefits are added on top of the long-term disability benefits, providing the insured with full compensation for lost income. Answer. Explanation. In Vermont, as in many states, long-term disability insurance policies often include a provision that reduces benefits by any Social Security Disability Insurance (SDI) benefits received. This is because SDI benefits are a form of income replacement, and the intent of the long-term disability insurance policy is to provide income replacement for lost wages, not to overcompensate. If the insured receives SDI, the amount of a SSDI benefit is typically deducted from the total long-term disability benefits paid. This ensures that the insured does not receive more than the predetermined benefit amount outlined in their policy. Question 11. Which of the following is generally considered a total disability under Vermont disability insurance policies? A. An injury that limits the ability to perform a few tasks but allows the insured to continue working full-time. B. An illness or injury that prevents the insured from performing the essential duties of their regular occupation. C. A temporary illness that only affects the insured for a few days and does not interfere with work. D. A condition that only requires minor modifications to the insured's workplace environment. Answer. B. Explanation. Under most disability insurance policies in Vermont, total disability means that the insured is unable to perform the essential duties of their regular occupation due to illness or injury. This typically applies to situations where the disability significantly impacts the insured's ability to perform their job tasks and is not limited to temporary minor conditions that don't interfere with the ability to work. The policy may also cover partial disability, where the insured can still work but at reduced capacity. Question 12. What is the primary purpose of the elimination period in a long-term disability insurance policy? A. It serves as a waiting period before benefits are paid to the insured after a disability is confirmed. B. It provides the insurer with the opportunity to verify the insured's medical condition and assess the validity of the claim. C. It sets the maximum duration that long-term disability benefits will be paid to the insured. D. It determines the amount of income the insured will receive while disabled. Answer. Explanation. The elimination period is a waiting period before the insured begins to receive long-term disability benefits. It usually lasts from 30 to 180 days, depending on the policy. The elimination period acts like a deductible The insured must endure this period without receiving benefits, after which they are eligible to receive payments for their disability. This period is designed to prevent the payment of benefits for temporary conditions that do not result in long-term disability. Question 13. Which of the following would most likely trigger a disability insurance claim denial in Vermont? A. A claim filed within 30 days of the insured's injury without proper documentation of the injury. B. Claim for pre-existing condition that was not disclosed during the initial application for coverage. C. Claim filed after the insured has returned to work even if they are still unable to perform their duties. D. Claim where the insured's disability is determined to be caused by workplace accident. Answer. B. Explanation. Disability insurance policies often contain causes related to pre-existing conditions. If the insured has a condition that existed before they applied for coverage and that condition later leads to a disability, the insurer may deny the claim due to the pre-existing condition. Most policies require full disclosure of medical history during the application process, and failure to disclose can result in claim denial. On the other hand, workplace accidents are generally covered by workers' compensation insurance rather than private disability insurance. Question 14. Which of the following would most likely be covered under a long-term disability insurance policy in Vermont? An illness that prevents the insured from working for only 3 days. B. A permanent disability caused by an accident that results in the inability to return to any job. C. A temporary illness that prevents the insured from performing non-essential tasks. D. A condition that requires a workplace modification but does not prevent the insured from working. Answer. B. Explanation. Long-term disability insurance typically covers disabilities that prevent the insured from performing their job duties for an extended period. A permanent disability caused by an accident that results in the inability to return to any job would generally be covered. Short-term illnesses or conditions that only cause temporary disruption to the insured's ability to perform minor tasks are less likely to meet the criteria for long-term disability benefits. Coverage typically applies to more severe and lasting disabilities. Question 15. Under Vermont disability insurance law, which of the following would most likely qualify as a residual disability claim? A. An insured who can no longer perform any of their job functions due to a severe injury. B. An insured who can only work part-time due to the effects of a chronic illness. C. An insured who returns to work but experiences significant limitations performing their full job duties. D. Both B and C. Answer. D. Explanation. Residual disability benefits cover individuals who are partially disabled and able to work, but at a reduced capacity. This includes those who work part-time due to chronic illness, B, and those who return to work but experience significant limitations in performing their full job duties, C. Both scenarios qualify as residual disabilities, where the insured experiences a reduction in their work capacity but is not entirely unable to work. Question 16. What is the purpose of a return-to-work program offered by some disability insurers in Vermont? A. To encourage the insured to accept any available job regardless of whether it is related to their previous occupation. B. To provide financial incentives to employers who rehire disabled workers. C. To assist the insured in transitioning back to full-time employment after a disability, often with rehabilitation or vocational training. D. To replace the income lost due to a disability by offering a percentage of the insured's former salary. Answer. C. Explanation. A return-to-work program helps the insured transition back into the workforce after a disability. These programs often provide vocational rehabilitation, job retraining, and support to help individuals regain their previous skill set or adapt to new roles. The aim is to ease the process of returning to full-time employment by offering services designed to reduce the barriers to work caused by a disability, such as physical or mental health issues. Question 17. Which of the following types of disabilities is most likely to be excluded from coverage under a disability insurance policy in Vermont? A. Disabilities resulting from an accident while on vacation abroad. B. Disabilities resulting from a pre-existing condition that was disclosed during the application process. C. Disabilities resulting from engaging in a dangerous activity such as skydiving. D. Disabilities resulting from an illness diagnosed after the policy's inception. Answer. C. Explanation. Most disability insurance policies in Vermont include exclusions for disabilities resulting from hazardous activities such as skydiving, scuba diving, or other dangerous sports. Engaging in these activities may be deemed as taking unnecessary risks, and insurers often exclude coverage for injuries or disabilities that arise from such activities. Disabilities caused by accidents while on vacation abroad, a pre-existing conditions, b. if disclosed an illness is diagnosed after policy inception, d. are typically covered depending on the terms of the policy. Question 18. Which of the following is most likely to be considered a valid reason for a disability insurance claim denial in Vermont? A. The insured's injury occurred while engaging in illegal activities. B. The insured has not yet reached the elimination period for their disability claim. C. The insured has filed claim after returning to full-time work. D. The insured is unable to provide physician's note within the first week of their illness. Answer. Explanation. Disability insurance policies often exclude claims for injuries or disabilities that result from engaging in illegal activities. If the insured was injured while committing a crime, the insurer is likely to deny the claim based on this exclusion. The other options, such as the insured failing to meet the elimination period, b. or providing a physician's note late, d. are typically not grounds for an outright denial, although delays or non-compliance may delay the claims process. Question 19. Which of the following best describes how benefits are typically paid under a long-term disability insurance policy in Vermont? A. Benefits are paid on a lump sum basis for the duration of the disability. B. Benefits are paid as a monthly benefit, usually a percentage of the insured's pre-disability income. C. Benefits are paid weekly and are equivalent to the insured's full weekly income. D. Benefits are paid annually in one large payment after the elimination period. Answer. B. Explanation. Under most long-term disability insurance policies in Vermont, benefits are paid as a monthly benefit, usually a percentage fee, G6070% of the insured's pre-disability income. This monthly benefit is designed to replace portion of the income lost due to the disability. It is not typically paid as lump sum or in annual installments, as the goal is to provide ongoing support throughout the disability period. Question 20. What type of coverage can be added to a disability insurance policy to provide additional benefits for recovery-related expenses in Vermont? A. Critical illness coverage. B. Rehabilitation or vocational training coverage. C. Term life insurance rider. D. Health insurance rider. Answer. B. Explanation. Rehabilitation or vocational training coverage can be added as a rider to a disability insurance policy to help cover the cost of rehabilitation, job retraining, or vocational counseling. This is particularly beneficial for individuals who are recovering from a disability and need support transitioning back into the workforce. Critical illness coverage is separate from disability insurance, while term life, C, and health insurance, D, are typically not included as riders for disability policies. Question 21. Which of the following is a common exclusion in most disability insurance policies in Vermont? A. Disabilities caused by car accidents. B. Disabilities resulting from drug or alcohol abuse. C. Disabilities caused by an on-the-job injury. D. Disabilities caused by a temporary illness like the flu. Answer. B. Explanation. Most disability insurance policies in Vermont exclude coverage for disabilities resulting from drug or alcohol abuse. These exclusions are in place to prevent individuals from receiving benefits for conditions that arise from behaviors that are considered self-inflicted or avoidable. Car accidents A and on-the-job injuries C may be covered by other types of insurance, such as auto or workers' compensation, but are typically not excluded from disability coverage. Temporary illnesses like the flu, D, are generally not severe enough to meet the disability threshold for coverage. Question 22. What is the typical duration for long-term disability insurance benefits in Vermont? A. 1 year. B. 5 years. C. Until the insured reaches retirement age or recovers. D. 10 years. Answer. C. Explanation. In most long-term disability insurance policies in Vermont, benefits are paid until the insured either recovers from their disability or reaches retirement age. The length of time benefits are paid depends on the specific terms of the policy, with some policies providing benefits until age 65 or longer if the disability is permanent. Policies may have different durations, but typically they are designed to support the insured for extended periods. Question 23. Which of the following factors is generally used by disability insurance companies in Vermont to determine the amount of monthly benefits? A. The insured's net income after taxes. B. The insured's pre-disability income, usually percentage, typically 60-70%. C. The insured's current monthly expenses. D. The insured's future earning potential. Answer. B. Explanation. Disability insurance companies typically base the amount of monthly benefits on a percentage, often 60-70%, of the insured's pre-disability income. This amount is meant to replace lost income due to the disability, allowing the insured to maintain similar standard of living. The insurer does not typically consider net income after taxes, current expenses, C, or future earning potential, D, when determining the benefit amount. Question 24. What is a rider in the context of a disability insurance policy in Vermont? A type of exclusion that reduces coverage for certain disabilities. B. An additional benefit or provision added to the base policy to provide extra coverage or customization. C. A clause that allows the insurer to cancel the policy if certain conditions are not met. D. A term used to describe the waiting period before benefits are paid. Answer. B. Explanation. A rider is an additional provision or benefit that can be added to a disability insurance policy to provide extra coverage or customization. Riders can offer benefits such as enhanced coverage for partial disabilities, cost of living adjustments, or coverage for specific conditions not typically included in the base policy. Riders allow the policyholder to tailor their policy to meet their specific needs. Question 25. What is the coordination of benefits provision in a disability insurance policy? A. It ensures that the insured will receive the full amount of benefits from all of their insurance policies. B. It helps prevent the insured from receiving more than their pre-disability income by adjusting the benefits when the insured has multiple insurance policies. C. It allows the insured to switch between policies when one policy expires. D. It provides a lump sum payment to the insured when multiple policies are involved. Answer. B. Explanation. The coordination of benefits provision ensures that the insured does not receive more than their pre-disability income from multiple disability insurance policies. When the insured has more than one policy, this provision ensures that the total benefit amount paid does not exceed the income the insured was earning before the disability. It helps prevent double dipping by adjusting the payments from different insurers. Question 26. Which of the following would most likely disqualify an insured from receiving disability benefits under a policy in Vermont? A. The insured can still perform some tasks, but not their entire job. B. The insured returns to a different job after a period of recovery. C. The insured is diagnosed with a condition that is covered under the policy. D. The insured is found to have misrepresented their health condition during the application process. Answer. D. Explanation. If the insured is found to have misrepresented their health condition during the application process, the insurer may deny the disability claim or void the policy. Accuracy and full disclosure are crucial when applying for disability insurance. Misrepresentation can lead to claim denials or the cancellation of coverage. If the insurer can still perform some tasks, they returns to work. B. Or has a condition covered under the policy. C. They may still be eligible for benefits under certain circumstances depending on the policy terms. Question 27. Which of the following best describes lone occupation disability insurance in Vermont? A. It provides benefits only if the insured is unable to work at any job regardless of their previous occupation. B. It provides benefits if the insured is unable to perform the essential duties of their specific occupation. C. It limits benefits to situations where the insured cannot work in any capacity, regardless of their occupation. D. It does not provide benefits for conditions that are not related to the insured's job. Answer. B. Explanation. Lone occupation disability insurance provides benefits if the insured is unable to perform the essential duties of their specific occupation, even if they are able to work in a different capacity. This type of coverage is more generous because it allows the insured to receive benefits if they cannot continue working in their usual job, even if they can perform other types of work. Any occupation policies are more restrictive because they require the insured to be unable to work in any job. Question 28. Which of the following is typically true about the relationship between Social Security Disability Insurance (SSDI) and private disability insurance in Vermont? A. SSDI benefits are not coordinated with private disability insurance benefits, meaning both can be collected at the same time. B. Private disability insurance will reduce benefits by the amount received from SCI. SSDI benefits automatically disqualify the insured from receiving private disability insurance benefits. D. SSDI benefits are typically higher than private disability insurance benefits. Answer. B. Explanation. Private disability insurance typically coordinates with Social Security disability insurance (SSDI) benefits. If the insured is receiving SCI benefits, their private disability insurance benefits may be reduced by the amount received from SSDI. This ensures that the combined benefits do not exceed the insured's pre-disability income. SSDI does not disqualify the insured from receiving private disability benefits. C. And SCI benefits are generally lower than private disability insurance benefits. D. Question 29. What is the role of a disability income rider in a life insurance policy in Vermont? A. It allows the life insurance policy to pay a lump sum benefit in case of a disability. B. It provides an additional source of income if the insured becomes disabled and cannot work. C. It guarantees a return on premiums paid into the life insurance policy. D. It increases the death benefit if the insured becomes disabled. Answer. B. Explanation. A disability income rider is an optional addition to a life insurance policy that provides an additional source of income if the insured becomes disabled and cannot work. This rider is intended to replace lost income during a disability. It does not provide a lump sum benefit. A. Or guarantee a return on premiums. C. Nor does it increase the death benefit. D. Its primary purpose is to offer financial support during a period of disability. Question 30. Which of the following is a characteristic of short-term disability insurance in Vermont? A. It provides long-term financial support for permanent disabilities. B. It typically covers disabilities that last more than a year. C. It provides temporary income replacement for a limited period, often less than a year. D. It is only available to government employees. Answer. C. Explanation. Short-term disability insurance is designed to provide temporary income replacement for a limited period, often less than a year. It typically covers short-term disabilities that prevent the insured from working for a brief time, such as a surgery, recovery, or a serious illness. Long-term disabilities A and benefits lasting more than a year B are typically covered under long-term disability insurance policies. Short-term disability insurance is available to a wide range of employees, not just government workers. D.